Greetings, wonderful traders. This is Pti Trading Institution. I welcome you to this wonderful video. Today we are just going to be breaking down secrets that you need to know about trading price action. So let us just get into my chart. So okay, the first thing that you need to know as a trader when you want to master price action is that you should always consider supply and demand. You should always consider supply and demand. So people can ask that, okay, if I can look in my chart here, every area here, it is supply and demand, or it is support and resistance. But what you need to note is that you should always consider the supply and demand on your higher time frame. Meaning, if I'm trading on my 30-minute time frame, as you've seen, I've opened it here. If I'm trading on my 30 minutes, then it means that my supply and demand, my more significant and more important supply and demand, is going to be on my high time frame. Meaning, I will have to go in a high time frame. Usually, I use the 4-hour, which is my maximum higher time frame, and then that's where I'm going to spot the most significant level. For an example, in this place here, where am I drawing tools? Let me check my horizontal line. For an example, here in this place, I have this significant level here, and I also have this significant level all the way down there. Let me try to spot it if I'll be able. All the way down there. So these are my two significant levels. So you see that I've not draw my my lines everywhere or anywhere, but I draw them to the most significant level where the price have reacted significantly, where the price have reacted here and here. So someone can spot, okay, it is support, it is resistance, but you need to see how the price reacted, how big the price reacted. So the other thing that you need to note, it is momentum. When it comes to momentum, you really need to consider momentum. How is the price moving when it comes to momentum? Because momentum, it is what tells you the side of the strength. Which side is the strongest? Is it the buyers? Is it the sellers? For an example here, you can see that in this pattern here, you can see that, okay, here the momentum of the sellers was decreasing. It was a big wave, and then boom, a smaller wave. You see, so meaning the momentum was going down. Even the momentum of the buyers was also going down. Here it was big momentum, less, meaning the buyers were decreasing in strength. That's why the breakout, it happened on the downside. Meaning if you can check here, the waves of the buyers are small compared to the waves of the sellers. So meaning the buyers momentum was decreasing more than the sellers momentum, although the sellers momentum was also decreasing, but the buyers momentum was decreasing even the more. That's why the breakout happened on the downside. So you need to take very careful note when it comes to momentum and when it comes to supply and demand. Supply and demand, it's on the high time frame. Momentum, you can check momentum based on the candles. You can check momentum based on the waves. When we check the waves, we check how long are the waves. How long are the waves? So meaning when the waves, let me just draw. Let's say your waves, they begin to become smaller and smaller. It means that your momentum is going down. The momentum for the buyers, because you see that the buyers, they pushed all the way up and they couldn't push the way up like before, meaning their momentum is dying. So when it comes to candles, you should check the size of the candles, meaning bigger candles means greater momentum. So I hope it is clear and it is making sense. So thank you for watching. You can check our website for more information. Check on the description below. Thank you. I love you.